Welcome back. As promised, getting into the management of Aarti Drugs now. That's after the US FDA issued an EIR for its MIDC Tarapur-based API manufacturing facility. Adhish Patil, the Chief Financial Officer of the company, is joining in. Adhish, good afternoon. Thank you for joining in. How big is this clearance for your Tarapur facility? How much does this contribute to your overall business? And with this clearance, how does it pave the way for what kind of drugs from this facility?
Yeah, hi, good afternoon. So definitely this is a very important success factor for us because not only for US but also for European market, it will help us to market our products. There was a lot of negativity among European clients because of the import alert from this plant. We already had European approval for this plant, but we were not able to export to European markets because of the import alert. So as of today, this plant was contributing only roughly around 25-35 CR per annum to the top line. But the potential of this plant is around somewhere around 80 crores based on the product mix. We have two big production facilities, two main production blocks, which are multi-purpose in nature. So we can do antibiotic, then sedative, then anti-inflammatory segments products from this particular facility. And we are very hopeful that within within a span of 12 to 18 months, we can start seeing some of the commercial exports from this plant.
All right, we take that point. Largely small contributor, but important from a strategy standpoint, like you've pointed out, Adhish, because your first half revenue is close to around 1100 odd crores. Even if you look at the last year revenue, 2500 crores, the plant does run at full capacity at around 80 to 100 crores, sub 4% of your overall revenues. But remember, Europe is around mid-teens, so maybe it could help in increasing the contribution coming in from there itself. But let's talk about the business itself. You had earlier said that you're targeting 7% growth in this year when it comes to the revenue, with the revenue doubling by FY27. Do you maintain the near-term guidance? And is there an update on the long-term FY27 guidance?
Yeah, so the FY20, based on the current API prices, we all know that last 3-4 quarters, the prices of APIs has been continuously decreasing. And that was mainly on the account of raw material prices going down, on the account of crude going down. So based on the current pricing scenario, it seems that at a full potential by FY 2027, we should try to aim at a turnover of roughly near about 4,000 crores. No doubt about that. We will still try to do that. As far as the near-term targets are concerned, what we feel is that there was heavy negative rate variance for this year, year on year. And in the beginning of the year, the exports were not doing that well. But now the exports have picked up in the second half of the year, plus two of the capacities which have come up, which will be coming up this quarter, that is in the March quarter, will also help us a little bit in terms of increasing the overall revenues, but not only revenues, but also help us in backward integration that might help us improve some margins as well.
So 7% revenue growth target is what you had in this year. Do you maintain that? And first half margins were 11.5%.
It will be flattish this year, this particular year, the entire
year. Okay, revenue will be flattish this year. And margins, how much?
Margins overall, we foresee around 12 to 13% EBITDA margins for the entire year.
So which means, so from 7%, you're saying that revenue will be flat this year, Adhish, if I'm reading that correctly, right?
Yes, because the earlier half of the year was not that good in terms of volumes as well. The second half, the volumes have picked up, but then because of the first half of the year, the overall revenue target may not be reached.
Right. So, and what about the entire API segment itself, considering that is the biggest of your business? How is the pricing scenario faring right now? And do you expect any sort of improvement going into the first 3 months of the second? Have you seen any improvement in the first 3 months of the second half? And do you see any further for the remainder of the year as well?
Yeah, so the improvement was seen only on the account of demand. The export demand has increased in the second half of this particular financial year. However, as far as the pricing is concerned, it is quite flattish. The December quarter pricing would be almost flattish, means will be equivalent to the September quarter pricing, which is a good sign because there would be further decline in the prices much. However, if we go year on year, that is December quarter versus December quarter, we might see some 4-5% negative price variance. Uh, yeah.
So despite you saying that revenue growth this year will be flattish compared to the 7% that you had earlier mentioned, do you still believe that you will achieve that 4,000 crore revenue guidance by FY27?
Yeah, it is fairly possible. And the main reason for that is two of our big greenfield projects have come online. And plus, we are doing a lot of brownfield expansion as well. And plus, this US FDA approval is very good for us. In fact, in last 2 years, we have three Brazilian approvals, a couple of European approvals, and now this US approval. So on the regulatory front, we are going quite well as far as factories are concerned. Now we need to buck up on the commercial side and focus more on the regulatory sales going ahead.
Since you spoke of the greenfield projects that have come online, does that include the one in Sayakha in Gujarat as well?
Yeah, so that will be coming up in this particular quarter. Yes, very much.
And how much will that contribute?
So that particular project mainly would be in intermediate and spec chem, though it may not contribute a lot on the top line, but it will definitely help us improve our gross margins.
And what about the brownfield expansion that you were mentioning, Adhish? If you can shed more light on that, how much are you planning to spend? How will you fund that and so on?
Yeah, so some of the brownfield expansion we have already done in the last year. Means one of the antidiarrheal product, already the expanded capacity has come up. We are going ahead with the expansion of few antifungal and cardioprotectant products as well. That particular expansion will be taken care of in the maintenance capex budget of around 50 crores per annum, which we have for every year.
All right, Adhish,
And
thank you so much.
mainly through internal accruals.
Right. Please go on. That will be through internal accruals, right?
Yeah, yes.
Yeah. All right, Adhish, thank you so much for sparing time and joining us today to discuss the road ahead for the company. Wish you good luck for the rest of the year as well. That was Adhish Patil, the CFO of Aarti Drugs. The bigger takeaway, though, is that they've cut their guidance for revenue growth this year to flattish compared to the 7% that they had earlier guided for.